14. Now let's have EDAS for 14. ABC matching of cost pools and cost allocation basis. ABC means activity-based costing. Match each of the following cost pools with the most appropriate cost allocation base and determine the overhead rates using each allocation base only once. So we have the cost pool where you have your cost drivers and the reasons why cost exists. So we have now the cost pool, including the assembly support, the machining support, machine setups, design changes. And we have the allocation base for number of setups, machine hours, design hours, and direct labor cost. Now, the question is to match each of the following cost pools with the most appropriate cost allocation base. So, for assembly support, assembly is one of the producing departments. So, we are now going to use direct labor cost for $50,000 divided by $75,000. So in other words, it's 0.67 cents per direct labor hour. We have the number of labor hours, and we are now given your direct labor cost. So per direct labor. In other words, per direct labor cost, your assembly support is equal to 0.67 cents. Then we go to machining support based on the number of machine hours. So we divide 80,000, the machining support cost, divide by the number of machine hours of 2,000. So in other words, the machining support is $40 per machine hour. Then we have the machine setups, the number of setups, cost of $25,000, and we have 200 number of setups. So your machine setup cost is $125 per setup. Design changes based on design hours. So the cost of design changes is $15,000 divided by 500 design hours. So we have $30 per design hour. These are your rates based on the four different bases. Now in E4 15, determining actual factory overhead. The books of Petri Products Company revealed that the following general journal entry had been made at the end of the current accounting period. Factory overhead 2000 under applied under and over applied factory overhead credit for 2000. Closed credit balance in factory overhead control account. In other words, it's a credit balance. So if you will close, you are going to debit factory overhead, and you credit the account under and over applied factory overhead. The total direct material cost for the period was $40,000. Total direct labor cost at an average of $10 per hour for direct labor was 1.5 times the direct material cost. So direct material cost is 40,000. Direct labor cost is 1.5 times, and the direct labor hour, the rate per direct labor hour is $10. Factory overhead was applied on the basis of $4 per direct labor hour. What was the total actual factory overhead incurred for the period? First, solve for the direct labor cost and then your direct labor hours. Now we are going to determine direct labor cost given at 1.5 times your direct material cost. So your direct labor cost is to be determined equal to 40,000 is given direct material cost given, since it's stated that direct labor cost is 1.5 times. So direct labor cost is 60,000. If your direct labor cost $60,000, we have to divide this by the hourly rate of $10. So we have a total of 6,000 direct labor hours. If your direct labor hours is 6,000 and the factory overhead application rate is $4 per direct labor hour, factory overhead applied to jobs is 24,000. That's applied. Less overhead factory over applied factory overhead equal to 2,000. In other words, the actual factory overhead for the period is only 22,000. Since the applied is higher than the actual, meaning there is an over applied. Once you credit the account under applied over applied, meaning the variance is favorable, the fact that it's a credit, and it means that the applied is greater than the actual. Usually, you have your actual recorded by using factory overhead control. So the actual is equal to only 22,000, whereas the applied is 24,000. So applied 24,000, actual 22,000. That's why your variance is equal to 2,000. That's your over applied factory overhead. The fact that we credited over applied. Then we go to E4 dash 17. E4 dash 17 has two requirements. Letter A, determine the prorated amount of the over applied factory overhead that's chargeable to each of the accounts. Prepare the journal entry to close the credit balance in under in over applied factory overhead. Now it's only one account under and over applied. So in letter A, we have the work in process is given at 25,000, finished goods 25,000, and cost of goods sold of 100,000. Now, it is to be considered that your over or under applied factory overhead may be recorded or close to one option is close it only to cost of goods sold. So directly close to cost of goods sold. The other option is to close the amount of the under applied or over applied factory overhead to the three accounts: work in process, finished goods, and cost of goods sold. So you have to prorate in accordance with the balances. So that's why your work in process is given a rate of 16.67%, the same with finished goods, and a higher amount for a higher rate for cost of goods sold. So the amount of the factory overhead variance of 20,000 as given a remaining credit balance of 20,000 in its unearned over-applied factory overhead account. The balance was deemed to be large and therefore should be close to work in process, finished goods, and cost of goods sold. That's the option. Actually, I'd like to repeat that the over-applied or the under-applied factory overhead may be closed by using either of the two options. One, if the amount is considered to be immaterial, then you can just close the variance directly to cost of goods sold. When I talk about the variance, I mean the over-applied or the under-applied factory overhead. The over-applied or the under-applied factory overhead. Okay? So, in other words, if to the extent that the variance is considered to be immaterial. However, if the variance is considered to be material, that's the time that you are going to allocate the variance to the three accounts. So we have now the three accounts: work in process, finished goods, and cost of goods sold. We are allocating the variance to the three accounts on a pro rata basis based on the balances of the three accounts. So we now have these allocated amounts to debit. We have the amount of unearned over applied factory overhead that we are going to close because the problem states that the account unearned over applied factory overhead at year end has a credit balance. So we can close the credit balance by debiting it. So we have now to debit unearned over applied factory overhead and credit the three accounts. Now, what is the indication that we are now crediting the three accounts? It means that the account balances will be reduced because normally the accounts are debits. Work in process is normally a debit. So when you credit it, that will reduce. The same with finished goods and cost of goods sold. Since the credit balance in the account unearned over applied factory overhead is a positive variance, it means that the applied exceeds the actual. So once the applied exceeds the actual, the variance will be a credit, and that is favorable. So if the variance is credit, then you have to debit it in order to close it and credit to the three accounts to the extent that that variance is material. No, that's why the problem here states that the balance was deemed to be large meaning material. So the credit, now you are going to debit and credit the three accounts. If the variance is deemed to be immaterial or small, then you can just credit to cost of goods sold in lieu of the three credits. Okay, so we now have the next is problem for this one, which is still in connection with the variable and fixed cost pattern analysis. The cost behavior patterns below are lettered A through H. The vertical axis of the graphs represent total dollars of expense, and the horizontal axis represent production in units, machine hours, or direct labor hours. In each case, the 0 point is at the intersection of the two axes. Each graph may be used no more than once. No more than once. Required. Select the graph that matches the lettered cost described here, from letter A up to letter F. But we have 8 graphs. We have only six to select. No, we have 8 graphs, but there are only 6 items. A. So we are going to match the letter with the corresponding graph. Depreciation of equipment. The amount of depreciation charged is computed based on the number of machine hours that the equipment was operated. So depreciation of equipment, the amount charged is computed based on the number of machine hours that the equipment was operated. In other words, this depreciation is classified as a variable cost because it's based on the number of machine hours. So the pair of small letter A is capital letter G. The depreciation charge varies directly with machine hours used. So in other words, the depreciation in letter A is a variable cost because it will increase as the number of machine hours increases. So we now go to letter B, electricity bill, flat fixed charge plus variable cost after a certain number of kilowatt hours are used. So the pair of this electricity bill is letter B, capital letter B. The flat fixed charge remains constant until a certain number of hours are used. Then the rate varies directly with the usage. So meaning the portion representing the fixed cost is the flat portion, and then it goes up after a certain number of kilowatt hours are used. Next, letter C, city water bill computed as follows. So, city water bill computed first, 1 million gallons or less, 1,000 flat fee. Next, 10,000 gallons, 0.003 per gallon used. Next, 10,000 gallons, 0.006. Next, 10,000, 0.009. Okay, so we have now letter D. We have letter D. The pair of, letter C. City water bill. The pair is capital letter D. There is a minimum charge up to 1,000 gallons. So the minimum charge of $1,000 flat fee up to 1 million gallons. Then the rate changes by 10,000 gallon increments. So take note that in letter D, we have the next 10,000 gallons, the next 10,000, and the next 10,000. You cannot find a line like a variable cost because the differences in the rates. Not only one rate for the variable component, but you have three different rates. So you now have the first 10, the second 10, and the third 10. Letter C, the pair is capital letter D. Next, the depreciation of equipment. The amount is computed by the straight line method. So the pair is letter F. F is purely fixed cost. Then letter E, we now have letter E, rent on a factory building donated by the city. The agreement calls for a fixed fee payment unless 200,000 labor hours are worked. in which case no rent need be paid. So we have the rent on a factory building donated by the city. The agreement calls for a fixed pay payment unless 200 labor hours are worked, in which case no rent need to be paid. Now, meaning you have to reach a minimum of 200 labor hours. Now, the pair is letter H. Letter H. You will notice that there's a flat amount. However, if it cannot reach 200,000 labor hours, then there is no rent to be paid. Then we go to letter F. Salaries of repair workers. One repair worker is needed for every 1,000 machine hours or less. So 0 to 1,000 requires one repair worker. 1,001 to 2,000 requires two repair workers. So we now have letter C. This is more of a variable, semi-variable. There is a fixed component, but the rest classified as step variable. So take note that for the 1,000 machine hours or less, you need one worker. So 0 to 1,000 hours, only one repair worker. 1,000 to 2,000 requires two repair workers. Now your letter F, the answer is C. So we have no choice. We have not used letter E. Okay. Actually, we have letter A. It's not chosen. Letter B is there. Letter C. Okay. No, letter C. Okay. Then letter D. Okay. Letter E. Again, we have not used letter E, but we have a letter F and letter H. And of course, we have letter G. Okay, so we have now for this one. Then I gave you for this two variable and fixed cost analysis. So variable and fixed cost analysis in for this two, we have three requirements: variable and fixed cost using the Hilo method. Miller Minerals Company manufactures a product that requires the use of a considerable amount of natural gas to heat it to a desired temperature. The process requires a constant level of heat, so the furnaces are maintained at a set temperature of 24 hours a day. Although units are not continuously processed, management desires that the variable cost be charged directly to the product and the fixed cost to the factory overhead. The following data have been collected for the year. So we now have the units and then the related cost and up to this actually good for 1 year. Separate the variable and fixed elements using the high-low method. So first, we are going to determine the highest capacity level. I told you that you have to look at the capacity level in terms of the units or the number of hours, the number of pieces or kilograms. So here, the highest among the units is 2,400. That's the highest among the units. So 2,400, the cost carried by it is 4,400. Notice that there is another 4,400 in July. However, you cannot use it for the highest because the capacity used for July is only 2,200 units. Okay? So the highest capacity level is that of January with 2,400 units and a cost of $4,400. Then the lowest capacity is that of October. So October is 1,400 units, 1,400 units. And the cost attached to it is 3,450. Now we determine the change in the units, 1,000, and then in cost is 950. Finally, we divide $950 by 1,000 units. So the variable cost per unit is 0.95 cents. Now, determining for the fixed cost at a level of 1,400 units, the total cost is 3,450 as given. Then we deduct the variable cost equal to 0.95 cents per unit times 1,400. So again, the variable cost is 0.95 multiplied by 1,400 units. That gives a difference of 2,120. That's your fixed cost. Now, at the capacity level of 2,400 units, your total cost, which is actually semi-variable, is 4,400. Then we deduct the variable cost component equal to 0.95 cents multiplied by 2,400 units. So it gives 2,280. Now getting the differences, we have the fixed cost component of the semi-variable cost equal to 2,120 in both capacity levels because again, we define the fixed cost as fixed in total regardless of the capacity level unless you are working beyond the relevant range. Now, the variable cost charged to product 24,000 units is 0.95 per unit. We get 22,800. The fixed cost charged to overhead 2,120 per month times 12 months. That's 25,440. That's for the whole year. The problem number 3 is requiring for the answer for 1 year. Now we go to problem for the 3. Actually, for the 3 has several requirements. Uh, for the 3, we have the following requirements in number 1, using a graphing paper, plot the data points on the graph and draw a line by visual inspection indicating the trend shown by the data points. So we have to use the problem in 4 dash 2, good for 1 year. So we begin now with January with 2,400 units and the cost of 4,400. Now we have divided this graph in smaller figures. So in January, we have the number of units of 2,400 and the total cost of 4,400. That's in January. Actually, we have a total here of 12 months, a total of 12 months. However, we are now trying to use how many dots? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. We have a total of 12 dots. Okay, so with 2,400 units, we are now beginning with 2,400 units at a total cost of 4,400. So total cost of 4,400. That's your 2,400 units. Then in February, 2,300 units for 4,300. Okay, so we have now the dots. Then in March, 2,200 units, and we have the cost of 4,200. 4,200. Okay, so this cost will be posted up to December. Now take note that the one in October with 1,400 units. Okay, 1,400 units with a total cost of 3,450. Now, take note that why we call this as scatter graph, because the dot scatter. And we have to see to it that in drawing the visual line, the line will pass through more dots. So take note that the line is passing through 1, 2, 3, 4, 5, 6, 7, 7 dots. 8, no? Bali, 8 gid ang lapakan sang visual line. So there, if you have to draw the line going downward, so the line will be drawn going downward. That's the visual line. And by drawing the line, actually, it will fall in your hair. So, bali ang iyang diretso, it will fall directly, that will be falling here with 2,100. Okay, so in other words, it's a visual fit. 2,100. So, second requirement in for the 3, determine the variable cost per unit and the total fixed cost from the information on the graph. So we have now the fixed costs are 2,100. Muna ang puno ya is read from the graph. Choosing a point on the cost line of 2,200 units. So 2,200 units. Take note. So we choose only one. 2,200 units at cost of 4,200. Okay? So we have now the total cost equals the fixed cost plus the variable cost. So we now get the variable cost of 4,200 minus the fixed cost of 2,100. So you have a difference of 2,100. The variable cost per unit is 2,100 is the difference divided by 2,200 units. So it gives 0.9545 per unit, 0.9545, 0.9545 per unit. That's the variable cost per unit, the variable cost per unit. And in number 3, determine the fixed cost to be charged to factory overhead for the year. So the fixed cost to be charged to factory overhead for the year. is 2,100. And the variable cost or the variable cost to be charged to factory overhead for the year. Bali, ang 2,100 nga fixed cost, that's the fixed cost to be charged, no? However, if we multiply 24,000 units, if we multiply 24,000 units by the variable cost rate of 0.9545, it will give us 22,908. That's for 1 year. So we have the variable cost and the fixed cost is actually 2,100 per month. Okay, so number three, if you are given a total of 24,000 units and you have now your variable cost rate, so the total variable cost is 22,908. That's problem number three, no? Determine the variable cost to be charged to the product for the year. Number four, determine the fixed cost to be charged to factory overhead for the year. So you simply multiply 2,100 per month multiplied by 12 months. 2,100 per month multiplied by 12 months. So you get $25,200. That's good for the year. Okay? Now, in number five, do these answers agree with the answers on 4 does 2? Why or why not? No, although close, the answers do not agree. In 4-2, the fixed cost per month was 2,120 and the variable cost per unit was 0.95. In 4-3, the fixed cost per month is 2,100 and the variable cost per unit is 0.9545. So far, they are near, the rates are near. However, if you compute it on a yearly basis, the rates, the difference is quite big, no? 2,100 against 2,120, there's a difference of 20. Tapos, ng imo naman nga 0.9545 and 0.95. But at least, you find close figures. Okay, we go to 4-5. 4-5. Okay. 4-5. Budgeted factory overhead cost. Budgeted factory overhead cost. Listed below are the budgeted factory overhead costs for 2011 for most industries at a projected level of 2,000 units. So the projected level is 2,000 units. Expenses, we have indirect materials, indirect labor, power for machines, straight line depreciation, factory property tax, and factory insurance. Prepare flexible budgets for factory overhead at the 1,000, 2,000, and 4,000 unit levels. You must first decide which of the listed costs should be considered variable and which should be fixed. And by the way, the listed costs are given for a projected level of 2,000 units. So we now begin with the classification of the expenses or cost into fixed or variable. So indirect materials, variable, indirect labor, variable, power from machines, variable, straight line depreciation is fixed, property tax fixed, factory insurance is fixed. So first we begin with the 2,000 units level as provided in the problem. We have 10,000, 20,000 and 15,000. Here we have 30,000, 28,000 and 22,000. Total here is 45,000 and here we have 80,000. So at the capacity level of 2,000 units, the total cost is 125,000. Okay. Now, if we determine the cost at 1,000 units capacity level, observe that your fixed costs are still the same. Okay? We define fixed costs as costs that remain constant regardless of production, regardless of sales, unless the operations were beyond the relevant range. But as long as they are within the relevant range, your fixed cost will remain the same. However, the variable cost, if you work from here as given, $10,000 divided by 2,000, that will give you $5 per unit. And so you compute 1,000 times $5 equals 5,000. $5 multiplied by 4,000 is 20,000. Then here, 20,000 divided by 2,000 units equals, okay, 10. So 10 multiplied by 1,000 equals 10,000. Here, 10 multiplied by 4,000 is 40,000. And lastly, uh, for power, $15,000 divided by 2,000 equals 7.50. $7.50 times 1,000 equals 7,500. At 4,000, you multiply by 7.50, then you get 30,000. So here you can see the difference between a variable and a fixed cost. A variable cost varies in total depending upon the capacity or the activity level used. Okay, so you will have a higher cost, variable cost, if the capacity level is higher. Okay? So, gani ang imong variable cost, nagabari na siya directly in proportion with volume or with capacity level. On the other hand, your fixed cost remains the same regardless of the capacity level used. Now we go to for the 6. In for the 6, we have the distribution of service department cost to production departments using the direct method. So using the direct method, you are now given the 5 departments. Okay, so the 5 departments with mixing, blending, finishing, and then we have the factory office and the building maintenance. Mixing, blending, and finishing are your production departments, mixing, blending, and finishing. However, your factory office and building maintenance are your service departments. Right. The first three departments are engaged in production, so meaning mixing, blending, and finishing. Whereas your factory office and building maintenance are service departments. During the months of June, the following factory overhead was incurred for the departments mixing, blending, and finishing, and with factory office and building maintenance. The basis for distributing service department expenses to the other departments follow. Building maintenance on the basis of floor space occupied by the other departments as follows. Mixing 10,000 square feet, blending 4,500, finishing 10,500 square feet, and factory office 7,000 square feet. However, we are told that using the direct method, we allocate the service department's cost directly to the production departments. Okay, so again, using uh, direct method. Using direct method, we allocate the service department cost. Using the direct method, we allocate the service department cost directly to the producing departments only. So in this problem, even though the factory office was one of the departments being served by the building maintenance, the factory office will no longer share in the cost of the building maintenance. The fact that the factory office is a service department. And when we talk about direct method, the cost of the service department should be allocated directly only to the production departments. So in here, the building maintenance cost should be allocated based on floor space occupied. So for mixing, 10,000 square feet for mixing. For blending, 4,500. And for finishing, 10,500 square feet. Now, if you add the square feet, you get total of 25,000 square feet. And you get the ratio 10,000 square feet. You multiply or you divide by 25,000. So you get 40%. Then for blending, 4,500 divided by 25,000, you get 18%. And for finishing, 10,500 square feet divided by 25,000, you get 42%. And you multiply this by 6,400, the cost incurred by the building maintenance department. So we now allocate to mixing to 560, to blending 1152, and to finishing 2688. Now once the service department cost is allocated, you have to eliminate it, 6,400. Then the factory office, the cost incurred is 9,000, and the cost incurred by the factory office should be allocated on the based on the number of employees. So mixing 30, blending 20, and finishing 50. All in all, we have total of 100 square feet, or 100 employees, I mean. So we have 30 over 100, that means 30%. 30% multiplied by the cost incurred by the factory office of 9,000. So you get 2,700. For blending, 20% times 9,000, or 1,804. Finishing, 50% multiplied by 9,000 or 4,500. In other words, we now allocate service department's cost finally to the production departments that will finally compute for the cost per unit. So now the total cost of the incurred by the production departments are their initial cost plus their shares in the cost of the service departments. So we have now for the six. We go to for the seven. Okay, for the seven. Still for the seven, we'll make use of the data, and for the six, prepare a schedule showing the distribution of the service department's expenses using the sequential distribution method in the order of number of other departments served. First, distribute the service department that services the greater number of other departments. So it's your building maintenance. Now, take note that the method is a sequential or step method. So we now have the cost of the building maintenance, the factory office, and those of the mixing, blending, and finishing, total of 79,400. Then we allocate the cost of the building maintenance. We are now using sequential or step method. So we are going to allocate the cost of the building maintenance to the other service department and to the three production departments. So the difference between the direct method and the sequential method is indirect method, regardless of whether the service department serves the other service department or not, you just distribute the cost of service department directly to the producing departments. Whereas in sequential, since the building maintenance department also serve the factory office, aside from the production departments, so the factory office should be given a share in the cost of the building maintenance. So that's why the factory office occupying 7,000 square feet, and then you divide that by the total square feet occupied by the four departments, and you get the proportionate rate for factory office 21.88% times the cost of the building maintenance. So the factory office gets 1,400, the mixing $2,000, no? Then we have the blending for $900 and the finishing $2,100. That's for a total of 6,000. No, for a total of a building maintenance, total of here 6,400. So 1,400 plus 2,000, 3,400 plus 943 plus 2,1 is 6,400. Then after the allocation of the building maintenance cost, we are now ready to get the total cost of the factory office. Its cost will then be distributed based on the number of employees. So only the distribution should only be made to only three, and these are the producing departments. We have now in the order of here, the order of mixing, blending, and finishing. Now again, take note that you are distributing factory office cost of 10,400 after it received a share from the building maintenance department. So we now get the distribution of the factory office of 10,400. We are going to distribute this to the three departments. So all in all, we are distributing here 10,400. So what are now the costs that remain with the mixing, blending, and finishing? These are your total direct and apportion expenses which will be used in determining the cost per unit. So for example, you're asked to determine the cost per unit in mixing. Now you divide the total by the number or the base. Whatever is the base in computing your cost per unit per mixing and for blending. Okay, for the 7, then we have for the 8, for the 8, the requirement of for the 8, here for the 8, we got two parts of for the 8. The first requirement is to using your solution to for the 7. Prepare journal entries for the following. Number 1, the distribution of the total factory overhead of 79,400 to the individual production and service departments where it originated. Number 2, the distribution of the building maintenance overhead to the appropriate other departments. And number 3, the distribution of the factory office overhead to the appropriate other departments. So the first entry, first we debit factory overhead building maintenance as given and as a portion. Then we have factory overhead, factory office, factory overhead mixing, factory overhead blending, and factory overhead finishing. And then we credit to factory overhead for a total of 79,400. Now we have the allocation of the factory overhead cost. Then, second, we have now the allocation of the cost of factory overhead maintenance using for the 7 data. So we now debit factory overhead, factory office, debit factory overhead mixing, factory overhead blending, and factory overhead finishing. We credit to factory overhead building maintenance for 6,400. Then in number 3, distribution of factory office overhead. So we now debit factory overhead mixing for 3,120, factory overhead blending 2,080, and factory overhead finishing for 5,200. Credit factory overhead factory office for 10,400. Okay, next we go to problem for the 10. Okay. For the 10 has two requirements. Okay. For the 10 requirement in number 1. Determine the cost of X6. Determine the cost of X6. Assume that the factory overhead is applied to production orders based on the following: one, direct labor cost, and two, direct labor hours. Hint, you must first determine overhead rates for each department, rounding rates to the nearest cent. Now, determining job cost calculation of predetermined rate for applying overhead by direct labor cost and direct labor hour methods. Beamer Products Incorporated has its factory divided into three departments with individual factory overhead rates for each department. In each department, all the operations are sufficiently alike for the department to be regarded as a cost center. The estimated monthly factory overhead for the departments is as follows: forming $64,000, shipping $36,000, and finishing $10,080. The estimated production data include the following. So we have forming, shaping, and finishing as the three departments. We have materials used, direct labor cost, and direct labor hours. The job cost ledger shows the following data for X6, which was completed during the month. We have now the three departments with material use, direct labor cost, and direct labor hours. Now, as shown for X6, one of the jobs. Determine the cost of X6. Assume that the factory overhead is applied to production orders based on the following. Number one, direct labor cost, and number two, direct labor hours. Hint, you must first determine overhead rates for each department, rounding rates to the nearest cent. So we have now for direct labor cost is the application rate in the case of number one. Direct labor cost is the application rate. So for forming, we are now dividing 64,000 64,000 by 16,000. Now take note that the basis or the application rate for factory overhead is direct labor cost. In other words, you are now using the estimated factory overhead for the forming department equal to $64,000. You divide that by the direct labor cost equal to 16,000. So in other words, the rate is 400%. The rate is 400%, meaning your direct labor cost is 400 or is only one fourth, no? Or your percentage of 400%, it means that your uh, factory overhead cost is four times your direct labor cost. For the shipping department is 36,000 divided by 15,000 direct labor cost, and for finishing it's 10,000 80 divided by 8,400. So take note that your factory overhead rate is computed based on direct labor cost. So we now have the cost of production of job X6, direct materials given at 120, 140 in shipping and finishing, 120. Direct labor cost 220, 870, and 270 and 240. Now for your factory overhead, we now multiply 400% by 220. 220 is direct labor cost because the base of your factory overhead cost is direct labor cost. So you now multiply 220 by 400%. And then for the shaping, you multiply 240% by 270. And for finishing, you multiply 240 by 120%. So you now get the factory overhead cost, determining now the total cost of job X6 because the production of units will be done through forming, shaping, and finishing departments. Now, in the case of number two, your factory overhead cost is computed based on direct labor hours method. So again, the forming department, you divide 64,000 by 800. Okay, 800 direct labor hours. So 800 direct labor hours, that's now 80 per hour. 80 per hour in the forming department. In the shaping department, it's 72 per hour. And in the finishing department, it's 28.80 per hour. So now we compute for the cost of job X6 for direct materials and direct labor, the same as in number one assumption. But for factory overhead, we compute it based on direct labor hours. So 12 hours in the forming department, 10 hours in shaping, and 8 hours in finishing, and by using the computed rates per hour. So we now get the total cost in the production of job X6 of 3,020.40, whereas in assumption 1, it's only for 2,926. Next, we go to the for the 12. We still have for the 12, for 13, for 14. Okay, we go to for dance 12, determining job cost using activity-based costing or ABC. Again, we have we have five requirements in for das 12, but remember that we are focusing on activity-based costing. Now we have the following cost pools: direct labor facility and support, machine support, material movement, and engineering. The potential allocation basis and their estimated amounts were as follows. So we are given now the budgeted amounts for each of these cost pools: 300,000, 250,000, 120, 5,000, and 75,000. So the total here, what are the bases? What are the bases? So in number one, the base is direct labor hours. Direct labor hours for your direct labor and facility support. The base is direct labor hours. For machine support, it's your machine hours. For material movement is the number of material moves, and for Engineering is number of component parts. So the overhead rates are for direct labor and facility support. We have now 300,000 divided by 25,000 direct labor hours. So we get $12 per direct labor hour. For machine support, $250,000 divided by 10,000 machine hours. So you get $25 per machine hour. For material movement, $125,000 divided by 400, the number of material moves. So you get 312.50 per setup. And for engineering, you have 1,000 per component part. Now, in requirement number 2, job 007 required $15,000 for direct materials, $20,000 for direct labor, 800 direct labor hours, 1,200 machine hours, 6 setups, and 4 component parts. Determine the cost of job 007. So job 007 given is direct material cost of 15,000, direct labor of 20,000. And then we have factory overhead using the rates above, no? So we have as stated, it's now using 15,000 direct materials, 20,000 for direct labor, 800 direct labor hours. So we use the rate at 12 as computed above based on direct labor. Then, for machine usage, given is 1,200 machine hours, and we use the rate of 25 per machine hour. Then, for material moves, we have 6 times as given, 6 setups, and you multiply this by 312.50 per setup. And for the component parts, we have 4 given, 4 component parts multiplied by 1,000. So we now get the total of 80,475. That's the total cost of the job. 80,475. That's the cost of the job. 80,475. Then in requirement number 3, assume Mansfield used the direct labor hour method to apply factory overhead to job 007. Determine the predetermined factory overhead rate using the direct labor hour method. If using the direct labor hour method, we now use 750,000. That's the factory overhead cost total. Then we divide it by direct labor hours. Direct labor hours. So we now get 30 per direct labor hour. 30 per direct labor hour. Next, in number 4, determine the cost of job 007 using the direct labor hour method to apply factory overhead. So determine the cost of job 007 using the direct labor hour method to apply factory overhead. So we have now direct materials 15,000, direct labor 20,000, and factory overhead is 800, assuming that the factory overhead rate used is direct labor hour method. So we now use 800 direct labor hours, and we have the rate at 30. We have the rate at 30. For the problem, we still have 4 dash 12. Uh, we have the rate of 30 per direct labor hour. So in number 3, we computed for the rate per direct labor hour that's equal to 30 $30 per direct labor hour. Okay, so in number 5, what might have been the impact on Mansfield's profits if it had used the direct labor hour method rather than the ABC method? Based on the results, it appears that the company would have undercosted job 007 if it had used the direct labor hour method, as the job appeared to require more machine time and be somewhat complex, as it required several component parts and material moves. For example, if the company had priced job 007 using a 40% mark on percentage, the sales price for job 007 would have been 82,600, which would have resulted in profit of only 2,125. So that's the selling price minus the cost of 8475 in number 2, given the more accurate cost computed using the ABC method. This profit is far less than the 40% margin that would have been expected. Next, we go to, after problem number 12, we have problem number 13. 13 requires entries for its requirement. Okay, so only journal entries for requirement of number 13. Now, record the previous transactions. Assume that the records include a control account and a subsidiary ledger for factory overhead, to which the entries will be posted at some later date. So we have now your entry for letter A in 4-13. Hughes Products Incorporated uses job order cost system. Selected transactions dealing with factory items for the month follow. Follow. A. Requisition indirect materials from storeroom 3,200. So the entry is to debit factory overhead, indirect materials, and credit to materials. Then letter B, purchase on account factory supplies for future needs. So the entry is to debit materials, as it includes factory supplies. So we credit to accounts payable. C, purchase parts on account for repairing a machine, 1,400. So we now debit to factory overhead for machine repair and to credit accounts payable on account ang pag-purchase. Then we have letter E, returned other defective factory supplies to vendors, 700. So we now debit to accounts payable and credit to materials. This entry is related to letter B and 3. Debit to materials and to credit accounts payable. So that's letter E. Then F, factory rent accrued for the month, 2,400. So we now debit factory overhead rent and credit to rent payable. G, return previously requisitioned factory supplies to storeroom. That's related to letter D. Letter D entry will be reversed in the case of letter G. So we now debit materials and credit factory overhead supplies. Letter H, depreciation of machinery and equipment, debit to letter H, factory overhead and credit to accumulated depreciation. Then letter I, payroll taxes, liability for the month, debit to factory overhead, credit payroll taxes payable. Letter J, heat, light, and power charges payable for the month. We now debit to factory overhead and credit utilities payable. Letter K, expired insurance on inventories. So we now debit to factory overhead and credit prepaid insurance. So letter L, we now debit factory, we credit factory overhead applied, debit to work in process. Letter M, indirect labor for the month, is debited to factory overhead, credit payroll. So letter N, goods completed and transferred to finished goods, materials, labor, and overhead to be recorded. So debit to finished goods and to credit work in process. So the total now is equal to 85,200. Okay, 85,200. Okay, so we have the entries as required. Now we go to problem 14. Problem 14 is determining overhead rates using direct labor cost, direct labor hour, and machine hour methods. Determining job cost, computing under applied and over applied overhead. AB Products Company is studying the results of applying factory overhead to production. The following data have been used. Estimated factory overhead, 60,000. Estimated materials cost, 50,000. Estimated direct labor cost, 60,000. Estimated direct labor hours, 10,000. Estimated machine hours, 20,000. Work in process at the beginning of the month, none. The actual factory overhead incurred for November was 80,000, and the production statistics on November 30 are as follows. So we have now your material cost, direct labor cost, direct labor hours, machine hours, and we have your date jobs were completed. So in requirement number 1, compute the predetermined rate based on the following: direct labor cost, direct labor hours, and machine hours. So number 1, we determine the factory overhead rates in based on letter A, direct labor cost, B, direct labor hours, and C, based on machine hours. So the predetermined factory overhead rate, if we use the direct labor cost rate as we have now 100%. So 100% estimated overhead is 60,000. That's the estimated overhead based on direct labor cost. So the estimated overhead given here, estimated direct labor cost 60,000, and assuming that we are going to use estimated factory overhead, I am reading page 245. Estimated factory overhead is 60,000. And if we are going to use estimated direct labor cost, then we use 60,000. In letter B, we use direct labor hour rate. So direct labor hour rate, still we divide 60,000 by the number of direct labor hours. So we have a total of 10,000 given on page 245, estimated direct labor hours. So get the rate of $6 per direct labor hour. Then for machine hour rate, estimated overhead divided by the estimated machine hours of 20,000. So the machine hour rate is $3. Next, requirement number 2, using each of the methods, compute the estimated total cost of each job at the end of the month. So in number 2, using each of the methods. So the methods using direct labor cost, direct labor hour, and machine hours. However, we are now asked to compute the estimated total cost of each job at the end of the month. Now, what are the jobs? Job 101, 102, 103, 104, 105, and 106. So we are now given the material cost of the jobs. Total material cost is 50,000. Direct labor cost total of 78,000. Then now we have the prime cost, total of material and direct labor. So we now apply overhead. We apply overhead based on direct labor cost. So how much is the overhead on job 101? Based on direct labor cost, so we just copy direct labor cost of 6,000 here, 6,000. So we just copy 12,000, 13,500, 15,600, 29,000, and 2,400. So the total direct labor cost is equal to the total applied factory overhead, since factory overhead is computed based on direct labor cost. Now, in the case of second base, which we are going to compute your total cost by using direct labor hour. So we have now the number of direct labor hours for job 101 is 1,000 direct labor hours, and we compute for the rate 1,000 direct labor hours, and we compute for the rate equal to 6 per direct labor hour. So if you have in job 101 a total of 1,000 direct labor hours, you multiply it by 6. So we still get 6,000. In job 102, we have again multiply by 6, 2,000 labor hours. Here, okay, 2,000 times 6. Here we multiply 6 by 2,500 direct labor hours. Here we multiply by 2,600 direct labor hours. And here, job 105, total of 4,500 direct labor hours times 6 in job 106, a total of 400 direct labor hours times 6. So we get now total of 78,000. Okay, then for machine hours, meaning we are going to use the machine hours for job 101. Job 101, the number of machine hours is 3,000 times number of machine hours 3,000, and the rate based on machine hours is 3. So 3,000 machine hours times 3, 9,000. Here we have 3,200 machine hours times 3. So you get 96. Then here we have 4,000 machine hours times 4, and so on. In other words, we are computing based on the number of machine hours. Now, the total cost, if we use direct labor cost, 11 plus 6, 17. 11 plus 6, 17. 11 plus 9, 20. Here, 19 plus 12 is 31. 19 plus 12, 31. 19 plus 9, 6 is 28,600. And the same procedure for the remaining columns. Total cost of the jobs. Okay, now the last problem that we are going to involve is for the 16, determining the under and the over applied overhead. So we have now in problem 16, we are asked for what are the requirements in problem 16. So we now begin with determine the under over applied overhead for each production department. Hint, first you must distribute the service department's cost. So we have now for dance 16. Okay. So we now have the following columns for building maintenance, general factory overhead. Then we have the machining and the assembly. So we have now for the individual cost 30,000, 75,400, 45,800, and 68,800. Total of $220,000. Now for distribution, we are going to distribute 30,000 in here. During the year, both machining and assembly use 28,000 direct labor hours. Factory overhead costs incurred during the year. You are given now the departmental factory overhead cost. In determining the application rates at the beginning of the year, cost allocations were made as follows using the sequential distribution method. Building maintenance, general factory overhead, 10%, machining 50, assembly 40. General factory overhead was distributed according to direct labor hours. Now, Rockford Company has four departmental accounts: building maintenance, general factory overhead, machining, and assembly. The direct labor hour method is used to apply factory overhead to the jobs being worked on in machining and assembly. The company expects each production department to use 30,000 direct labor hours during the year. The estimated overhead rates for the year include, so for a machining and for assembly. Okay, so we now have the distribution of 30,000, the cost of the building maintenance. And how do we allocate a building maintenance to general factory overhead? 10%, machining 50%, and now we are using the sequential distribution or the step method. So you are given the rates to be used in the distribution of the building maintenance cost. So we now use 10%, 50%, and 40%. Finally, the general factory overhead, instead of 75,400, its total cost now is 78,400 to be distributed here. The general factory overhead, we have to distribute this to the machining and assembly departments equally. The company expects each production department to use 30,000 direct labor hours during the year. And general factory overhead was distributed according to direct labor hours. Now, since as stated, both departments, production, machining and assembly, will use 30,000 direct labor hours. In other words, we have to distribute the cost of the general factory overhead equally to the machining and assembly departments. So the machining department now has total factory overhead cost of 100,000, the assembly of 120,000. Applied factory overhead rates here for the machining, we use 28,000 28,000 during the year. Both machining and assembly use 28,000 direct labor hours. So we now use the rate of $4 as the total of the machining, $4, and that of the assembly is 4.50. So we now get the actual for machining 100,000, for assembly 120,000, applied for machining 112,000, assembly 126,000. So we now get the over applied for machining because the applied is greater than the actual. For assembly, the same, the applied is greater than the actual. Actual, 120,000, applied is 126,000. So over applied are for machining and assembly for 12,000 and 6,000 respectively. Okay, that's all. So I hope you will study this by referring to the lecture and as well as, okay.